And in our top business story, the Ministry of Economy's annual report has revealed that the UAE economy is witnessing strong economic progress, with gross domestic product expected to accelerate to 3.4% in 2017 from an estimated 3% this year, despite challenging regional and global economic conditions. According to local reports, the GDP has tripled during the past decade, increasing from 511 billion dirhams in 2006 to 1.58 trillion dirhams in 2015. It is expected to reach 1.8 trillion by the end of 2016. Inflation is expected to stabilise in 2015 at 2.3%, the same level recorded in 2014, but will rise up to 2.5% this year. That's according to the report. According to the International Monetary Fund, the UAE's current account surplus is likely to decline to 71.56 billion dirhams. That's the equivalent of 5.4% of GDP in 2015, but would rise again to reach 105 billion dirhams, which is the equivalent of 7.3% of GDP this year. In 2015, government spend reached 179 billion dirhams. That's an increase of 3.8% from 2014 and 4.5 to 6% compared to levels before the emergence of significant oil price fluctuations. Strong government spending targeted at economic diversification and major infrastructure projects, including those for the World Expo 2020, as well as the expansion of airports, the Etihad rail, air and marine transport systems and road networks in the country, are expected to boost the growth outlook. The report said that the country is making a continuous effort to reduce oil dependence in line with the UAE Vision 2021 and the national agenda, with the contribution of non-oil sectors reaching 69%, leaving only 29% to the oil sector. DP World and Canada's second largest pension fund, CDPQ, are creating a $3.7 billion financial vehicle to invest globally. The Dubai Ports operator will hold a 55% stake in the new platform and will be used to invest in ports and terminals worldwide. That's excluding the UAE. According to reports, most of the money will be used for existing projects, and a quarter of the funds will be dedicated to new developments. CDPQ will acquire a 45% stake of DP World's Canadian container terminals on the Pacific coast in Vancouver and Prince Rupert, valued at $640 million. Sultan Ahmed bin Sulayem, the DP World Group chairman and chief executive, was quoted in the report saying that the opportunity landscape in the port and terminal sector remains significant, and this partnership offers them greater flexibility to capitalise on these opportunities while maintaining a strong balance sheet and retaining control. Meanwhile, Michael Sabia, the president and chief executive of CDPQ, added that through this investment platform with DP World, they will have unique access to high-quality transactions and the opportunity to invest in the best port infrastructure worldwide. According to Boston Consulting Group, CDPQ is the 8th largest global infrastructure investor in the world, with 704.39 billion dirhams of net assets under management. The Dubai Real Estate Regulatory Agency has announced that there must be a written agreement where property owners authorise estate agents to deliver their marketing campaigns. The new process is as per the new directives issued by the Dubai Land Department. And once finalised, the permits will be issued through the regulatory agency's e-service system and will apply to adverts used to sell a property or project in Dubai. According to a statement, Dubai real estate advertisement mechanisms will be regulated through this system, with RERA facilitating marketing agreements between the landlords and the brokers through its Form A. The property owner is required to sign Form A to authorise brokerage offices to market any properties, in order for any broker to obtain permission from the DLD to represent properties for sale or for lease. The landlord is permitted to deal exclusively or with more than one real estate broker for the marketing of any property. Ali Abdullah Al Ali, the director of the Real Estate Licensing Department, was quoted saying that they regulate the process of advertisements within a specific agreement that defines the role of each party involved in any real estate sales or rent with total precision, which will guarantee the rights of all parties, including landlords, investors and brokers. Senior executives in the UAE and Saudi Arabia are confident that consumer demand across the Arabian Gulf will remain strong going into the new year. According to a local daily, the strength of local consumer sentiment comes as the UAE and Saudi Arabia are expected to experience higher GDP growth in 2017, even as the impact of last week's landmark deal to cut oil production takes time to have an impact on the country's finances. A survey of more than 500 high-level executives conducted by research company Borderless Access found that over 90% of UAE-based executives agreed that consumer demand across the region is likely to be strong for the remainder of this year and into next, with 38% of respondents strongly agreeing with the statement. Saudi executives were also broadly in agreement that consumer demand would remain strong, with 31% of responders strongly agreeing. Additionally, the study revealed that economic growth has slowed across the Arabian Gulf region in the past 24 months, especially in Saudi Arabia, due to a sharp fall in oil revenues hitting disposable incomes hard. Saudi Arabia's economy is forecast to grow by just 1% this year, compared with 3.5% in 2015. That's according to research firm Capital Economics. The Central Bank of the UAE forecast that growth will rise to 2.2% in 2016, compared with 3.8% last year. In spite of economic challenges, according to Borderless Access, the Gulf region continues to benefit from favourable consumption dynamics due to a growing middle class and a rising number of high net worth individuals.